Clock is ticking, folks. You've got just under 2 weeks left to file your taxes. Remember, the deadline is the 18th this year, not the 15th, because the 18th is a Monday. It's important to keep some things in mind here to avoid surprises on your tax bill. Let's talk more about this with Kim Dula, CPA and managing partner at Friedman LLP. Kim, thanks for being with us. Obviously, a lot of folks need your help at this time of year. So we have been hearing some sort of anecdotal reports that people are concerned about getting surprise high tax bills. What are some of the biggest culprits for that potentially happening?
So far, what we're seeing, and you are 100% correct, Julie, many people are, finding that they have tax liabilities when they're getting their tax returns prepared this year. Much of it has to do with the market and the fact that the market was very, very good in 2021. And people, recognize substantial capital gains. And now what they're coming to find is now it's time to pay tax on those gains. So whether if they chose to sell securities through their portfolios in order to make sure that they're getting, they were able to take advantage of the markets, or for those who are invested in mutual funds, there's something called capital gain distributions. And for the last several years, we haven't seen big capital gain distributions come through until 2021. And unfortunately, those don't get paid out until the end of the year. And now when people are getting their 1099s, they're seeing this larger amount of income that now they're paying taxes. So there's a lot of very surprised individuals right now, especially with 2 weeks to go, who find that they have larger tax bills and payments to make. But capital gains, I would say, is the biggest driver right now. And just to be clear, I know there were a lot of rumblings that later in 2021 that we could have had a new tax plan. That never happened. So we are dealing with the same rates, same capital gain rates, same ordinary rates, but much more income than maybe investors have seen in prior years. And that's coming as a surprise to many as they're finalizing their tax returns over the coming weeks.
Kim, what steps should investors be taking today to avoid these surprises next year?
It all, honestly, Brian, it all goes to planning. So make sure that if you work with a tax professional, even if it's at year end, do whatever planning you need to do in order to make sure that you're not surprised come tax time. So that means, if you're reviewing your statements or you're having semi-monthly meetings with your investment advisor, ask the questions to say, what is this going to mean come tax time to me? It may mean that you have to increase your withholdings from your salary if you're a W-2 person. It may mean that you have to increase your estimated tax payments if you pay estimates quarterly. But at a minimum, you just want to make sure that you are not surprised in April of 2023. So I tell every one of my clients, if I understand taxes are not the most fun thing to think about throughout the year, but if at a minimum you could, reach out and let's have a discussion in November or December, at least then you can plan accordingly from a liquidity standpoint and you're not surprised right now.
It's funny, Brian Stasi did not tell you, but his brother is a CPA as well, and apparently just messaged him and said, tell people don't procrastinate, get their forms in now. I mean, it's interesting to me that people still do that, don't they? They wait until the last second. What percentage of your clients, I'm just curious, wait until the last second to get their stuff in?
I would say, so we pride ourselves, right? I am so blessed that I get to work with so many clients who they understand the importance of getting things early, getting things in soon so that they can plan accordingly for April 15th or in this year, April 18th, and what the payment could be. But I would say we have a good 25% of our folks who they're sending their stuff in late March, early April. And that's hard because now maybe they're not getting their tax packages until right before the deadline, which can create an issue, can create some anxieties. Unfortunately, I have run into situations where taxpayers just don't have the liquidity to make those payments. So now they're asking questions. Should I use a credit card? Should I have an installment agreement with the Internal Revenue Service? What is the best action for me to take? But even having a few weeks of leeway so that you can plan accordingly as to how to find that liquidity, everything helps. Everything helps. So the sooner you get that process started, the better. And that's why I tell many clients, if you have larger transactions during the year, unusual events during the year, do your planning at the end of the year so that you know come April what you'll be looking at in terms of, those tax dollars that are now coming due.
All right, so that's an important message from Kim and from Gary Sazzi as well, apparently. Finally, you mentioned, the people who have liquidity problems, and I'm curious now, coming out of the pandemic, hopefully for most people, right? What are some of the other challenges that you're seeing because of that legacy now of having 2 years where some people were getting checks from the government, some were having liquidity issues, to your point. Now, what kind of repercussions is that having this season?
Well, I think the biggest repercussion is the fact that from a tax filing perspective, if you recall 2 years ago when we first were living through the pandemic, the tax filing deadline was extended until July. So that gave taxpayers a few more months, because they were dealing with so many other things as they should have been, that they could defer worrying about having to file their taxes and even pay their taxes until July. Then last year, we didn't have until July, we had until May. And a lot of people right now are still a little bit confused by, okay, well, now what's that deadline? Is it still April? Do we have until May? And I think that's where some of the procrastination came from as well, with submitting their information. Also the complexity. So we're asking questions about what stimulus payments did you receive? What didn't you receive? There were some advanced child tax credits that were issued. And so people are trying to sort through all of that information because it has to be provided to us as preparers so that we're accurately reporting what's been received already, or if you haven't received those stimulus payments, so that you get those rebate checks. So it is creating a bit more work for folks, especially folks who, like many who, taxes are not top of mind all the time. And so people are scrambling around trying to gather that information. And it just creates some additional, a lot of additional work at most of the time, not a very good time for anyone.
Yeah, I think for most people, taxes are not top of mind all the time, which is why we are thankful to have someone like you on to talk with us for your expertise. Kim Dula, thank you so much. Appreciate your time of Friedman LLP. She's a CPA there, a managing partner. And of course, it's a busy time for her right now. Thank you, Kim. Well, you want to stay tuned to Yahoo Finance's Tax Time All Market Summit Extra. That's on April 12th at 2 p.m. Eastern. We're going to break down everything you need to know ahead of tax day. This was just a little teaser just now.